This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Okay, here we're going to work through question 3 from the June 2009 paper F5 exam, which is crumbly cakes. So make sure you've got the question in front of you, either from a revision kit or downloaded from the ACCA website. Now, you'll have used your 15 minutes reading time to have had a quick look at what's required. But just let's quickly look at the requirements. Part A, assess the performance of the production manager, the sales manager, indicate whether current bonus scheme is fair. Well, we'll look at the details in a minute, but just a very quick glance at the variances. So, at this stage, don't look in detail, but you can see very quickly the word variance in the table and, of course, price, mix, yield. But anyway, part A, assess the performance. We'll come back in a moment. Part B, calculate material, price, mix and yield variances. So part A here is writing. Part B is numbers. And it's very tempting to go straight into the numbers. And it doesn't matter which order you do A and B in. But the one big danger is spending all your time simply on part B, because most people prefer numbers. The chance in the middle of an exam of getting it 100% right is small. And so although in theory you could pass on part B alone, it's too big a risk. You've got to do a reasonable part A, whether you do it first or whether you do it last. I certainly would do it first. I wouldn't spend too long. I'd write what I felt was obvious. There are some obvious points, and hopefully get half the marks fairly quickly. I can leave empty space, and as I'm doing the numbers, I may think of some more things to write. But let's look at part A anyway in a bit more detail. And read the requirement carefully. Assess the performance of the production manager, the sales manager, and indicate whether the current scheme is fair. Now, I wouldn't write those 3 things down in an exam, but certainly I would have underlined on the question paper, because he's wanting 3 separate things. There'll be marks for each of them, but make sure that you show separately your answer to each. So let's have a quick read. Crumbly Cakes makes cakes, which are sold direct to the public. The new production manager has argued that the business should only use organic ingredients in cake production. Organic is healthy, but it doesn't really matter here what it means, because he explains in the next one, organic ingredients are more expensive, but should produce a product with an improved flavour and give health benefits to the customers. It was hoped that this would stimulate demand and enable an immediate price increase. Do note, it was the production manager's idea. These ingredients are more expensive, which will cost us money, but we hope it'll stimulate demand, will sell more, and a price increase. Crumbly Cakes operates a responsibility-based standard costing system which allocates variances to specific individuals. The individual managers are paid a bonus only when net favourable variances are allocated to them. The new cake production approach was adopted at the start of March, following a decision by the new production manager. No change was made to standard cost card. The variances are below. So you can see the variances for February and for March. The production manager is upset. He seems to have lost all hope of a bonus under the new system. Sales manager thinks the cakes are excellent and is very pleased. Well, let's look at the performance. First of all, the production manager. But we're given variances for each of February and in March. And so, the first thing to say is just comment straight on those variances as they are. February, they were favourable. So favourable variances in February and all you can really say is he did well. Not brilliantly, but even so. He spent less than we'd have expected, and we produced more than we would have expected. But more importantly is March, and remember, it's March when we adopted this new approach. And so what's happened in March? First of all, we spent more on materials. Well, we know why, and say why. I say we spent more, it's because it's adverse. We've spent more because we've used organic, which are more expensive. Another point to make now, which is slightly less obvious, but mix variance. If you've forgotten what it is, we'll check the arithmetic later, but because it's an adverse mix variance, it must mean that we bought more than planned. Of the more expensive material. Or here it's ingredients, means the same thing, materials. And that's because the mix variance is adverse. However, as the production manager really done badly, he told us at the beginning, the production manager, it was his idea to spend more by buying organic because he thought we'd sell more and we'd have a higher price. And have we sold more and had a higher price? Yes, we have. But if you look at the sales variances, 7,000 favourable, 3,000 favourable, in actual fact, it's been a very good idea that changing to organic was good because we've ended up with a net variance of how much? On materials, we did overspend. It was 2,100 adverse, it was 600 adverse, 400 favourable, so 2,300 adverse. But our sales variances, we gained 10,000. And so there's a net overall benefit of what? 7,700 favourable? And so, this is what he was after. The production manager has actually performed well. So although the variances look bad in March, actually we should be very pleased. However, what about the sales manager? Well, again, in February, he did badly. We've got adverse variances. He did well in March. But, of course, how much was down to him? Maybe he did have to do a bit of selling, but the real reason is the change to organic. Which, of course, was due to the production manager. However, remember, he wanted three things. We've mentioned production manager, we've mentioned sales manager. The final thing, though, is the bonus scheme fair? Well, I think by now the answer should be obvious. They get a bonus if they get favourable variances. Well, the answer is no. It's not fair. Because here, it's the production manager who's done well. But it's the sales manager who's got the bonus. And another point that goes with that, which you should mention, and he gave you the clue, look at the, where are we? Yes, the third paragraph, the second line. They had organic, but it says no change was made to the standard cost card. And surely what's really making it unfair is we're comparing actual costs with an out-of-date cost card, or out-of-date standards is perhaps a better way of putting it. Surely if we wanted it to be more fair, we should have updated the standards once we changed to organic, or we should have revised them. Well, that's enough on that. And certainly, I know to think of every single bit of that in the middle of an exam is hard, but I keep saying you only need half marks, and certainly what I've written there, I'm confident would get the full 7. However, now let's turn to the numbers part B. Part B, they actually want us to calculate the variances, and on the first page of the question, we're given a cost card. On the second page of the question, we're told what actually happened, and we've got to do the variances. Now then, I must say right from the beginning, before I go through it, there is more than one way of actually setting out your variances. Certainly when it comes to the yield variance, I'm going to do it the way I find more logical, easier to remember and safer. If you've been taught another way and you're happy with it, don't change, as long as obviously you end up with the right answer. But let's have a go. Part B. Let's go straight into it. First of all, the price variance. Now, I always set it up in 2 columns. For the price variance, remember, you're taking your actual purchases. It's what you actually bought. And you're comparing the actual cost with the standard cost. Now for me, it becomes really automatic. I just learn them, set up a table. And although anyone can make silly mistakes, that's only costing the odd half mark. Otherwise, it really should become automatic. What are our actual purchases? Well, there's flour, eggs, butter, and sugar. From the second page of the question, we know how much we spent. On flour, we spent £7.41, eggs £5,610, butter £11,880, sugar £2,747. We spent a total of £2,978. we're going to compare that with what we should have paid. Again, actual purchases at standard cost. Well, flour, we actually bought 5,700. How much should it have cost? Well, look back to the standard cost card on the previous page. It should be 0.12, 12 cents a kilo. I'll multiply up in a minute, but let's show the workings. Eggs, 6,600. From the cost card, it's 70 cents a kilo. Butter, 6,600 again. What is it? 170 a kilo. And finally, sugar, 4,578. 50 cents a kilo. Let's multiply up and add up. What does it come to? $684, 4,620, 11,220, 2,289. The total, $18,813. So how do we pay the right price? $18,813. We actually paid $20,978. And so the difference, the price or the expenditure variance, the difference is how much? $2,165. And we spent more. We spent 20 against 18. It's adverse. And there we are. Now, obviously, in 2 seconds I'll carry on. But two things there. First of all, set it out nicely. You know, but obviously when you're hearing in an exam, it's so easy to make silly arithmetic mistakes. It's clear from the way I've set it out there, it's clear what I'm doing. And so although I've got the right answer, even if something had gone wrong, I'd still get most of the marks because it's obvious to the marker that I'm trying to do it the right way. Secondly, the question doesn't ask you to split the variance between materials. The question and the layout in Part A suggests that all we need is the total variance, so I've got full marks for that. But check carefully, you could have been asked to show it in total and for each individual material, in which case, fine, it wouldn't take long. Flour, for instance, we spent 741 as against 684. The variance for flour is 57. Well, I'm not going to do them all. It wasn't asked for. Here, it would be wasting time. All right, well, that's price. Let's now look at the mix variance, which is where too many start to go wrong. And again, I'll do my layout. Don't change if you're already happy with the way you do it. But again, I do it in columns. For the mix variance, you take your actual total input. And what I mean by that is in total, how many kilos did we buy? Look at the actual results on the second page. Forget all the lost business. In total, we input 23,478. We'll worry about this lost business afterwards, but that's what we actually bought. We want to look at the mix, or we compare the way we actually mixed it with the way we should have mixed the input. And let's do it, but check carefully. You see the ingredients were flour, eggs, butter and sugar. How did we actually buy it? Look at the second page. We actually bought 5,700 kilos. Flour, 6,600. eggs, 6,600 butter, and 4,578 sugar. The total 23,478. How should we have mixed it? Well, for our total of 23,478, if you look at the standard cost card, on the first page of the question, which I've lost, sorry, here it is. The total input on the cost card is 0.4 kilos, but for every 0.4 kilos, it should have been mixed, 0.1, it should have been mixed equally. So understand what we're saying. For every 0.4 kilos, 0.1, oops, a fraction 0.1 out of 0.4 or a quarter should be flour. Similarly, eggs, I'm being a bit silly here, but butter, sugar. If we'd mixed it the right way, then a quarter would be each ingredient, and a quarter is 5,870. I'm not going to worry about 0.5, and so already there is a little bit of rounding. To cost out the variance, well, in both cases we'll cost at standard cost. And here we can save a little bit of time, because actual mix at standard cost we've already done. That there was 5,700. There's what we actually bought, and at standard cost it was 18,813. How much would it have cost if we'd paid the right price? Well, if we had the right mix, I beg your pardon. So the standard cost, 0.12, 0.7, 1.7, 0.5. The correct mix at standard cost would have cost us a total of 17,727.4. And so, learn from this, if necessary. Here's how we mixed it, here's how we should have mixed it. In both cases we've costed at standard, and the change in mix here has cost us a mix variance. Our mix 18,000, correct mix 17,000, the difference. $1,085.6 adverse. Our mix cost more than it should have done. Alright, only one left, and I appreciate it's the last one that causes the most upset for the most people. And I don't want to confuse, for the last time, a lot of people set this out differently. I prefer my layout. I found it easier to remember. But as long as we get the right answer, that's all that matters. I'm going to do it in columns. And what we compare is this. We compare what we actually bought, our actual total input. I'm going to leave a space to finish the rule off, but we already know that in total, flour, eggs, butter, sugar. In total, how much was it, the actual figure? 23,478. That's what we actually bought to make our cakes. I want to know if we bought too much or too little in total. We compare it with the standard total input for the actual production. So all we do is this. How many cakes did we actually produce? Well, on page 2 it says, second sentence, actual production sales 60,000 cakes. $60,000 units. Sorry, it doesn't write very well. I was at the bottom of the page. And how many kilos should I have bought, should I have input for every cake? Look at the cost card. Well, every cake, the standard weight is 0.36 kilos, but we did expect to lose some. The point was, if everything went perfectly, it should be 0.40 kilos input per cake. Alright, then the rest was lost. We expected to lose, but if everything went perfectly, we would have expected to buy 24,000 kilos. We managed to produce them with only 23,000. Our loss was less than we'd have expected, or if you prefer, the yield, the output was more than we expected. I don't care, but the point is, we were expecting to use 24,000 kilos, we only used 23,000. Immediately we have a favourable variance. We need to cost it. Well, we've dealt with mix and price, so in both cases, that's standard mix and standard cost. So, let's cost them. Well, one of them we've done. The actual input, standard mix, standard cost. Why waste time doing it all over again? Because that's what we did here. We took the input, we took standard mix and standard cost, and we got 17,727.4. That's how much our mix cost us. Sorry, I beg your pardon. That's how much our input cost us. And we mixed properly and priced properly. If we'd have bought the right quantity, well, standard mix, remember? It was a quarter for each from the cost card. So we should really have been expecting to have to buy 6,000 kilos of each. And how much should it have cost? The standard costs for the last time. I hope my arithmetic's right here. But what's the total? 7, 9, 11, 18,120. So, had we bought the right total quantity, we'd have spent 18,000. We already knew we bought less. We've saved money. It would have been 17,000. And therefore, the yield variance, the difference, uh, 392.6, favourable. I remember he specifically said he wasn't after any comments here, so we won't waste time there. But there we are. Alright, there was price mix yield. Note though, he wanted quite a bit here, but he gave a fair number of marks, but he did want the sales price and the sales contribution. Well, these are actually very easy. It's the materials ones that take time. If you found you were taking too long, why not jump and get the sales price, sales contribution? For sales price, remember, you take your actual sales, and I would actually write this down in the exam because anybody can know what they're doing but grab the wrong figure. We actually sold 60,000. We want to know if we sold at the right price. Well, it says the actual results, the actual price was 99 cents. What should we have sold them at? Well, if you look at the standard costs, the standard selling price, it should have been 85 cents. And so every cake, we got an extra 14 cents. In total, therefore, 8,400 is a favourable variance. And finally, even quicker, the sales volume variance. All we're interested in here is, did we sell more or less than we budgeted? The actual sales in units was 60,000. The budget sales were only 50. Oops, sorry, what am I doing? We sold an extra 10,000 units, so clearly it's favourable. And the benefit at the standard contribution per unit from the cost card, 35 cents. He couldn't have made it easier. He gave you the figure. We didn't have to work out the contribution. And so those two are very quick. And there we are. I'll check in a minute. I think we're more or less in the time, but I have talked a lot. But do be careful. I've said twice, I know. But however you do your workings for the variances, clearly with a lot of numbers and under time pressure, that's when you make mistakes. Mine are right. Any difference in the answer is just rounding and irrelevant. But do make sure your workings are clear enough that at least they can give you the credit for doing it the right way, even if something went wrong. Arithmetic mistakes is only half a mark here, half a mark there, provided they can see what you're doing. Okay, that's it.